Hello, good morning, everybody. I'm Yevgen Pitelman, an agent with Coldwell Banker Real Estate, and thank you very much for joining us in our next episode of Learning from Experts. Today, our guest, our mortgage professional team member, Sal Tomaselli. Hi, Sal. Thank you very much for coming.
Good
Thank you.
morning. Good morning, Eugene. How are you?
Good. Thank you. And then today, we asked Sal to talk about his product that's called reverse mortgage. It's been, in my understanding, this kind of product has been in the market for many years. But first of all, it's not your regular mortgage, and you need to know a little bit more than just the name. And also, as far as I understand, there's been a lot of changes over the years in this product, positive changes in my understanding. So this is why we invited Sal today, and we want to talk about this in more detail. So Sal, please tell us what you know about it.
All right. Well, Eugene, thank you very much for having me on. And, I want to say hello to everyone and give you a little background on myself. I'm president of Professional Mortgage Solutions, and about 10 years ago, we created Go Reverse Mortgage, which is specifically related to seniors. I did this because my grandfather, who turned 95, ran out of money, and I had to start looking at options. I kind of managed my grandfather's finances for him. And we started looking at options for my grandfather to see what was available for him, because he really didn't want to take any money from his children, and he wanted to be able to live his life. And he had a tremendous asset. He had this home that was worth, at the time, it was probably worth about $900,000. It's in New York, and multifamily, three-family home. And when I did my research, I knew nothing about reverse mortgages. And after I did my research, I determined that a reverse mortgage line of credit was probably ideal for him. And it started my journey on learning about this product. And it was a very effective tool for me as a mortgage professional, but also for our family. I was able to help my grandfather, and he was able to he laughed. He ended up living to 101. So we got him the mortgage at 95. And it was a tremendous tool for him because it enabled him to fix his house, make repairs, put a new roof, do various things. And so I became very passionate about this product. People are very concerned about it because years ago it was, it started roughly in 1961, and it's evolved since then into, it used to be, I would call it somewhat of an unsafe product back in the 60s up until
unsafe, you say?
It was unsafe. It was not the best choice for seniors up until roughly about 2001, where there were significant changes. So, when you have older seniors that remember we'll call it the bad reverse mortgages, they have something stuck in their head, and there's a tremendous amount of misconception and misinformation around reverse mortgages. Reverse mortgages have come a long way. They're tremendously safe. They're, typically they're government insured, and there's so many safeguards built into it. And so, like the new reverse mortgage of the 2000s, from 2001 forward, is a really safe product, and so much so that over the years there's been additional safeguards that have been added to it. So it's become a tremendous tool. And as we all get older, we need more money. We need money for care. We need money. Your income typically goes down. And even if you're financially stable, I find that a lot of our financially stable seniors want to give gifts to their children and grandchildren before they pass away. They want to see them enjoy the benefits of their work. And so a lot of times I have seniors that are giving their gifting as a strategy from a tax standpoint, but they're gifting their kids, their grandkids, giving them monies for down payment on houses, so that they can go purchase a home. In certain markets, it's very expensive. Most markets these days are very expensive.
Yeah.
And so what this enables them to do is to watch their children and grandchildren, be able to buy a home, and they get a tremendous degree of satisfaction out of that. So it's really been a tremendous product. There's some, I'll delve into. I have some visuals for you today, Eugene. So
Thank
I'll
you. Thank you.
I'll get them up
Always
on the
welcome.
screen.
Always welcome. We like to
But
see.
just to give you a history, just I'll bring up one of my first screen now, and we'll just bring. Okay. So what I had said earlier is that the first reverse mortgage. Can you see my screen?
Absolutely, yes.
Okay. First reverse mortgage was issued in 1961. President Reagan in 1989 made it made it a HUD product, or an FHA insured product. So it gave some stability to the product. Years ago, for between 61 and 89, people would actually transfer their deed to the lender, and they would get to stay in the house for the rest of their lives, but they wouldn't be the owner anymore. Well, that all changed in 1989. And in 89, HUD, basically reversed, or made that not permissible anymore. And from 89 and 2001, there was a lot of reform in the reverse mortgage arena. In 2009, baby boomers started using the reverse mortgages. And what's interesting right now is, if you could see, if we jump over to 2017, the limit was raised to 636,000. Now in 2023, the limit's over $1 million for this type of loan, which gives the senior. I'm going to stop sharing. I'm going to come back in. Hello, Eugene. Which gives the seniors a tremendous amount of, ability to utilize their equity in their homes. And here's what happens. Typically, people save for their future. Sometimes they save enough, sometimes they don't. But their number one asset, one of the best things they ever do, is purchase a home. As you know, as a realtor, it's probably one of the best investments.
Yeah.
And so, people have all this equity built up in their homes, but they really can't unlock it so easily, because once you retire, if we're talking about somebody who's in their 70s or maybe in their 80s, you're typically not working anymore. And so their income goes down. Maybe they get a pension, they get Social Security, but it's not a tremendous, it's not enough to bridge the gap as expenses continue to rise. Mm-hmm. And so the reverse, I found from my grandfather, out of personal experience, was a tremendous tool to allow my grandfather to utilize basically his money that was locked up in the house. And we were able to use, his money, and able to improve his cash flow, make renovations, pay for his medical expenses. So there was a tremendous, that I have seniors who travel the world now. They took out a reverse mortgage. They raised their kids. Everybody has grown, and I have younger seniors, in their late 60s, 60s and early 70s that are, taking 6-month cruises because they're utilizing the equity that they've built. And the product is, is really, really safe. I'm going to share my screen again. I'm going to show you,
How it works.
Another aspect of it. People say, well, how can I get the money?
Right.
And there's basically a couple of options. There's a lump sum option.
Okay.
There's a fixed monthly advance, which is kind of like Social Security, where you get a check every month. The one I like the best is the line of credit.
Okay.
And the reason why I like the line of credit is because the line of credit, sorry, go back there. Apologies. Okay, the reason why I like the line of credit is because it gives the person all the benefits. They can pull money as needed if they want to travel, if they want to do anything. So it gives them a lot of flexibility. And so, I have people purchasing new homes and, moving to a warmer climate, so so there's all different types of benefits to this program. I'm going to just come off. I'm going to come back in again. And one of the things is once you do some or start thinking about estate planning and taxation, these are really important. The reverse allows you to do some things that traditional mortgages don't allow you to do. And so, as a homeowner, most people are worried about is the government, am I going to be taxed? Is my estate going to be taxed? And if you do proper estate planning, you're able to circumvent or through the tax benefits that are available to you. If you do the proper estate planning, you can eliminate taxes either for your estate and for your heirs. So most people do, and they also do tax planning. They also change the structure of their loan. So if you go to a lawyer and you say, I want to protect myself. What's common is something called a Medicaid asset protection trust. That's a lot. It's a big word, right?
Yes.
But basically, what is it designed for? It's designed for if you go into a nursing home, you have this home that you own for all your life, and now you go into a nursing home, and now the government can attach a lien against, we all know how expensive nursing homes are these days. And the government can attach a lien to your estate. Well, if you do some estate planning and kind of eliminate or box out that possibility, and there's something called a Medicaid asset protection trust or an irrevocable trust. A lot of attorneys can do that for you, but what people find out afterwards is that the normal lenders, their normal banks, don't offer financing for trusts or for life estates. There's a couple of different structures, and I'll bring up another screen, Eugene, real quick. This is a quick overview, and if anyone has any questions, my number is above my head over here, and so the reverse mortgage allows you, so a lot of times you'll go to as I was saying, you go to an attorney, and the attorney will say, let's protect your asset. Okay. And most people who don't protect their assets will just keep their home in their personal name. And that's kind of dangerous because as you get older, should you need to go into a nursing home or anything, it exposes the property to being to a lien being placed against the property. So if you were to go to an attorney, most attorneys then will do something called, life estate structure, which is a very simple way. If you own a house, typically what they'll do is they'll transfer the property into typically the children's names and then give back what they call a life estate to the individual, to the owner. And they basically have all the rights of home ownership without actually owning the home. And it kind of circumvents the 5-year look back period that Medicaid has. The most bulletproof way to do it is something called, forming an irrevocable trust. It's also known as a Medicaid Asset Protection Trust, which is a very, it's a long word, okay, but it's designed to protect the property from lien holders. And it's a great way, I did it for my grandfather, and it worked out fantastic. Because the heirs got the benefit, got the distribution, and the distribution was essentially tax-free. So it was a great tool. But what you'll find is most normal banks will not allow you to finance in these structures. And the beautiful part about the reverse mortgage is that it does allow you to finance in these structures. So if you want additional information on this, I'd be happy to, discuss this in more detail and kind of lead a client to, the right decisions based on their individual circumstances. So,
Yes.
that's one of the benefits of the reverse mortgage. I'm going to stop sharing the screen right now. And so, in order to, just to delve into how a reverse mortgage works a little bit, it's pretty, it's pretty simple. And I'll share my screen again. I have a different slide. And basically, you have to be at least 62 years old. There are some states where you could be 60, but for the most part, most people would have to be 62, and you have to live in the property as your primary residence. So you can't do it on an investment property. It has to be on a primary residence, which is great. So as long as you live in the house, that's it. You also have to have some equity in the property. And in addition, you have to be able to pay your taxes and insurance. So you have to have a certain type, a certain amount of income to be able to cover your taxes and insurance. But it is a lot easier than qualifying for a traditional mortgage. So they make it much, much simpler. That's one of the benefits. What types of properties are permitted? Single family homes, condominiums, 2 to 4 family homes, and mixed use properties. Okay. So
basically any type of property except for co-ops.
Co-ops are emerging right now, and are actually permitted. This presentation predates that. Co-ops are just recently introduced. There are, however, some restrictions with regard to co-ops. So it's a little difficult to do a co-op, but it is doable. And so, I wouldn't say co-ops are not permitted, but there are some restrictions. There are some additional restrictions on it. So I would, my recommendation is that if you're interested in exploring a reverse mortgage, we're here. We're your local experts. We have a lot of experience in it. We can guide you accordingly. It's a tremendous product for anyone over the age of 62. I'm going to be 60 in March, and it's when I turn 62, it's probably going to be one of the first things that I do. I'll get a line of credit that I could use for the rest of my life. And the beautiful part about the lines of credit is that nowadays they grow by a little, just under 8% annually. So if you start out with we'll use easy numbers. If we start out with $100,000 line of credit, the next year you're entitled to 108, and the year after that about 117, and the year after, it just goes up by about 8%. So it kind of keeps pace with inflation. So if I'm as lucky as my grandfather and I live to 101, I'll have a lot of money to use, during that period. But like I said, is a great product for anyone over the age of 62. It's tremendously safe. It's been made into a very safe product, and it's something that we can use in conjunction with your regular client base. If you have young people looking to buy a house, what we do is sometimes we're able to get a reverse mortgage for the clients, for their parents or grandparents, and that enables them to give a gift to the young buyers, the 20-year-old or 30-year-old that's looking to buy a home. They can get a gift from their parents. And the beautiful part about that is, and we kind of really didn't even touch upon this too much, but the reverse mortgage does not require a monthly payment.
Right.
So they can give the gift to their children or their grandchildren or their nieces and nephews, and they really don't feel it because there's no monthly payment associated with the reverse mortgage. So it's a really great tool. And I'm available to answer any questions if anybody has any questions about it. But it's something that I highly recommend. If you use it prudently, it's a tremendous financial planning tool. And it's something that should not be overlooked. I think it's something that it gives a tremendous amount of buying power to people. So that's basically it, Eugene. That's the my little synopsis on reverse mortgages.
I
So
got you. Thank you so
helpful.
much. Thank you. I also wanted to ask you a question or two about.
Sure.
So basically, this is a good introduction for people who never knew about this existence of this product. So for those who already knew about this existence, what would you say is the most common misconception about this type of mortgage? What are these? What are the things that's changed? Maybe people don't know about that.
I think the most common misconception is that people think they could lose their home, and they also believe that they transfer ownership or title to the property to the bank. And those are the two things that are totally not true. You retain ownership of the property, and it's really, really, you will not lose ownership of your home. Banks typically do everything in their power not to foreclose. You don't see really that many the foreclosures on reverse mortgages, because most people, in order to keep, your only obligation on a reverse mortgage is to pay the taxes and the insurance. And since most seniors are already doing that, there's really no possibility or very limited possibility of a reverse mortgage going to foreclosure. Most of the time, the lenders really don't want to, they're not looking to foreclose on any seniors. If you don't pay your traditional mortgage, you'll get foreclosed on eventually. The bank will start a lawsuit against you. With reverse mortgages, there's so many safeguards built in. Generally, you won't have any action started as long as there's so much help built into it. They'll call, they have counselors, they'll assist you in working out a plan. So we very rarely do we have any issues with reverse mortgages, even after you pass away. So when does a reverse mortgage become due? It becomes due after you pass away.
That will be my next question. Yes.
When you leave the house. So how do you leave the house? Well, you can leave the house a couple of ways. You can go into a nursing home, into a permanent care facility. Well, that you left the house. You also leave the house if you go live somewhere else. That'll trigger the reverse mortgage being due. And if you pass away. And they give you so much latitude with reverses. They give you, if someone, what typically happens is most seniors are very responsible people. They pay their taxes, they pay their insurance, and then and unfortunately, when we pass away, then the property, it's in the hands of an estate, right? So it's the executor or the administrator of the estate. And the banks understand that this takes a long time to sort out. People have done some estate planning or they haven't. So the banks give you typically up to a year to settle out the estate. So you have a lot of time to, get your affairs in order, deal with any kind of issues. So it's really a very safe, slow moving process. And it's a tremendously safe product, and the banks are there to really work with you as a senior. So
what if the house is not in the estate?
Well, if you pass away,
yes,
it will go into an estate.
I thought, okay.
State of the individual. And then there's somebody that's typically, if the client dies with a will, if the homeowner dies with a will, that will indicate who the executor is of the estate. A lot of times it's a child, or it's one of the children. If it's in a trust, there's the administrator of the trust. And if they die without a will, typically they'll have to go to probate. They'll go to court, and someone will be appointed who's typically a family member. So these things, so at the end of the day,
they still have time to sort things out.
Yes, there's a tremendous amount of time to sort it out. So they're very pliable, the lenders, and they don't really apply a lot of pressure because they know these things take time. So you have a long time, even after you pass away,
Okay. And before that, the only obligations for you basically is just to pay taxes, and that's it. No other obligation. Then use the money.
Taxes and insurance. As long as you maintain the insurance on the property and pay the real estate taxes, you have no. What's great about it, Eugene, is that a lot of times, if we have seniors that have existing mortgages, maybe a lot of the baby boomers, which takes you up to about 1964. I was looking this up the other day. So, 1964, if you're born before that, you're considered a baby boomer. And a lot of the baby boomers have not done a tremendous amount of estate planning, and they're going into their 60s and 70s with mortgages on their property. And so what they do, they need to create some additional cash flow. So you can eliminate your mortgage payment by getting a reverse mortgage. You become 62, and let's say you have a $300,000 or $400,000 mortgage on your property. You can actually eliminate that mortgage, and that coupled with your Social Security, or if you have a pension, or if you have some retirement savings, you can live out the rest of your life pretty comfortably because you're eliminating, you're freeing up. I have cases where seniors are freeing up $1,000 a month, $3,000 a month, and that makes all the difference, in their ability to live life and enjoy life, and they can travel and do things. So it's tremendous tool, and it uses the equity in their home, which is fantastic.
Gotcha. Okay, look, Sal, thank you so much. It was really, really helpful, and I do hope a lot of people will find it helpful for many, many times. Guys, please call Sal directly if you have more questions, if you want to work with him, if you need help with any kinds of mortgages, not only the reverse. If you need help with real estate questions, give me a call. I'm here for you. And please stay tuned for our next episode. Sign up for our channel to be notified for when the next episode is out. Again, Sal, thank you so much for your time. We'll see you next in the next episode.
Eugene, thank you. Thank you for the opportunity. And I'm here. If anybody wants to ask me any questions, feel free. Telephone is 718-457-4290. And my email is sal@betterloans.net. Thank you, everybody. Thanks again, Eugene. Take care.
Bye.
Bye-bye.
Bye-bye.
Bye-bye.